Introducing Zach Davis and Josh Anderson with the SoundMoney Podcast.
Hello and welcome to this week's episode of the SoundMoney Podcast. SoundMoney, Sound Principles. My name's Josh Anderson here with Zach Davis. How are you today, Zach?
I'm good, Josh. How's it going?
Oh, it's awesome. We are in for a wild ride today. Like, it has been a wild couple days in our world. Some of our businesses, are directly tied to what we're going to talk about today. So it's been a wild week for us in this topic that we're about to dive into. And this topic comes to us today because it's massively in the news, right? This topic is all over the place right now. You can't go to a news outlet. You can't go to X. You can't go to Instagram without seeing something being said about today's topic. And it's got people in one of our business spaces just in a sure panic. And so that being said, what it is today, Zach, is we want to kind of dive into a little bit around this idea of Doge. Elon Musk and Donald Trump have both come out and said, we're going to go audit Fort Knox. Right, Zach? So that's what's happening. That's a little crazy, right? They're saying, we're going.
Yeah, I mean, there's been speculation for years of whether there's actually gold sitting in Fort Knox or not, right? And I mean, people are always asking, is it even in there? Can we have faith in the U.S. dollar? It's like, whether it's in there or not, you still can't have faith in the U.S. dollar. But we're about to find out if they go in there and they audit that thing, what really is in there. And I wonder if people really understand the significance of that and why Fort Knox even existed. I mean, I hear lots of people like, what's Fort Knox? Like, why does this audit matter? Interesting topic for the day.
Well, it's an interesting topic, right? And like, let's just dive in real quick. For those listeners who maybe don't know what Fort Knox is, right? We've always seen it in the cartoons, right? Whether it's Bugs Bunny or whether it's Yosemite Sam or the Road. We see some cartoons of our childhood with Fort Knox, right? Where they keep all the gold bars, right? And so a lot of people though don't really understand what Fort Knox was built for originally. Fort Knox was originally built for the sole and express purpose in the 1930s to house the U.S. Treasury Department's gold that backed the U.S. dollar, right? So up until 1971, every dollar that was printed had to be backed by physical gold in Fort Knox, and that's how the dollar got its value. And so up until that moment, right? And they say it's the most secure facility in the world, and you can go read all the crazy protocols that we have around securing it and those things. But the real reality is, and by the way, that number, pre-1971, that was 14.7 million ounces of gold was supposedly there in 1971. We went off the gold standard.
There's been audited since.
Yeah, it hasn't been audited since, right? I think the last time a president of the United States went in the building was 1974. 3 years after we went off the gold standard was the last time a sitting president entered the facility. The last government official to enter the facility was 2017. Then Secretary of the Treasury, I thought that time was Mnuchin. Was who was there, and he took one senator with him, and they just went in the building. There was no audit, and in 1974 there was no audit. The last time it was actually audited was 1936. And ever since 1936, it was on paper. They stated that there was 14.7 million ounces of gold there in 1971. So, I mean, this is ripe for speculation, right? It's ripe for speculation around, is the gold there? Is the gold not there? And Zach, what's been going on in the discussion between what Elon Musk and what Donald Trump have been pointing to why we got to go audit Fort Knox?
Yeah, I mean, so this is why it's important that the gold is sitting there, because most people don't understand what the significance is of the gold being in Fort Knox. And before 1971, and there was a short period in the 1920s where we went off the gold standard as well. But Nixon took us off of in the Bretton Woods Agreement, right? And during World War II. But the problem is the United States fiat dollar, okay, the paper dollar, had to be backed by something. So there was punitive things that could happen if the U.S. printed too much money. That's how everybody had faith in the whole world. That's where everybody got their faith that we could use the U.S. dollar as the standard and peg that our currency to their currency, and it would be the world's recognized currency because we know the U.S. will not print more dollars than what they have gold stored or purchased sitting in Fort Knox, right? So when we went off of that standard, it was because we needed to print more money to keep up with the war efforts, and we didn't have enough gold, right? So Nixon was like, hey, Brentwood's agreement, take it off the gold standard. Now the world is the faith, full backing and faith of the United States government. Well, Doge just blew that out of the water with these audits, right? You can have faith that we are probably one of the most banana republic corrupt nations in the world when it comes to our monetary system. But with all this conversation, I mean, what it really matters, what means is we have had runaway debt because there was nothing punitive. There was nothing they could say, oh, there's gold sitting in Fort Knox, so we can print $1 against it. It was like, we don't care if there's gold in Fort Knox. We're not on the gold standard anymore. We're just going to print as much as we want. And that's why a lot of these countries don't have faith in our currency anymore. And that's why there's so many trade imbalances. So there's going to be some significant things, in my opinion, are going to happen if they walk in those doors and find out that we don't have enough gold. And there's some nervous people, because you see, the U.S. government is shipping gold from London in the droves. So whether we were just storing it there or whether these are new purchases to catch up with it, like this is going to be a really interesting audit when they go in there and do this.
It's really interesting, and you mentioned, the full faith and credit of the United States of America, and how we got to this point is remarkable to me, because we really didn't have, in 1971, we didn't have enough gold in the vaults for the dollars we actually had in circulation. I know that, and you know that, because the reason that Nixon during the Vietnam War took us off of it was because he said, because the speculators, right, were taking advantage and calling for their money. Well, the speculators were the countries of France and Germany and United Kingdom, England. They actually brought their dollars to the United States and said, we want the gold. And they didn't give it to them. And so there was, anyone with half a brain, any economist with half a brain would say they didn't give it to them because we didn't have enough in 1971, which means between 1936 and 1971, we reduced gold in the vaults because we couldn't give it to those countries. I think it's funny when you watch the speech, he calls them speculators, but they're countries. They're France, Germany. They're countries that said, we have your dollars and we want our gold. Yeah. And that made it. So we had to go off the gold standard.
Yeah, he didn't want the U.S. public to fear that these other nations did not have faith in us, right? Yes. And because it would have crashed our currency. And so that's why he, because typically you'd say speculators, you'd be like, the market movers.
Market movers, people buying it and selling it.
Yeah. Yes, exactly. People trading it and shorting it and trying to manipulate the price and all that. No, the speculators were all these other countries going, we don't think you have enough gold to back this.
We don't think you have it. So that puts us in a spot, right, that pre-1971, before we went off the gold standard, most of the world knew we didn't have enough gold in the vaults. Then since 1971, really since 1974, we haven't had a president go there. There's not been an audit since then. And so when they say we're going, and by the way, when two billionaires who are the most powerful men on earth say we're doing something, I'm here to tell you, when you two entrepreneurs tell you they're going to do something, oh, by hell, they're going to do it. Like, it's going to happen. And it's just because I've spent my whole life with entrepreneurs. So they're going to go.
And the more resistance they get, the more guaranteed it's going to happen. An entrepreneur needs resistance, and it will happen.
It'll happen. Now, this is what's interesting to me, right? This goes back to from election night until now, we have seen the highest prices of gold of the world existence, right? Gold has done nothing but continue to rise since election night, because most people around the world know they took Donald Trump at his word that he was going to do audits and he was going to find out where gross negligence was and where fraud was. And in so doing, it's unfortunate, but that would destabilize the dollar. Right? The dollar is a fiat currency that we put our faith behind, that it is being managed and used appropriately. By every time Doge finds a problem, right, that puts less faith in the US dollar, which drives gold prices up. So we're seeing gold eagles at $3,180 today, right? Gold bars at $3,000 an ounce. These are the all-time highs, okay? But Zach, those are right now driven by inflation, by weakening of the US dollar. They're driven by supply and demand of people saying, I need to own some of that. And mostly banks, JP Morgan, Chase, these companies,
All the
Bank of
central banks.
America, they are buying up massive amounts of gold, right? We are in the gold space. Like, it just so happened that Zach and I, in one of our companies, we've been lucky enough to at one point be buying half of every U.S. silver eagle produced in a calendar year, right? 50% of them came through us on the planet. So we know the space, right? Like we know all the players, we know who buys, we know when they buy. And the institutional buyers right now on gold are absolutely crazy how much gold they're buying up. The U.S. Treasury is buying more gold than they've ever bought, which is driving price higher and higher, right? To this point that it's $3,000 an ounce. So Zach, what does it look like? One of two questions. Let's say that they open the vault doors. And by the way, isn't it kind of interesting? Don't you think that somebody's got to be really kind of crapping their pants right now? I could just see them in there like, we got 100 bars, put them on the top. And let's put some tungsten ones underneath, right? You can just see this stuff going on. Build some cardboard ones real quick for underneath the
Yeah, hurry, make it look big.
But one of two things is going to happen, right? Gold prices are already at the highest they've ever been. What's going to happen if they open those doors and there's no gold? And what's going to happen if there's only half of the gold in there?
It's going to be wild. I mean, there's no way to speculate what, and obviously I'm not going to speculate and fearmonger where the price is going to go. But it's going to be crazy. So what you just said about what's going on and what's driving the gold prices. Okay. These are just outside influences right now without this.
Yes.
That have driven the prices of gold. Go back to when President Trump ran in 2016. He said that he was going to try to take us or put us back on the gold standard again, right? At that point in 2016, where the national debt was, I did the calculation, and in order to get the reason you go on a gold standard is so that all of your debt is backed by gold, right?
Yes.
There would have had to been a reset in price back then in 2016. Gold would have immediately gone to over $5,000 an ounce just to satisfy the debt. Well, here we are, 2025. The debt's gotten much, much bigger.
Actually, 6x bigger, 6 times, like 6 times 6.
Yeah. So the reason I mention this is because it plays into the factor, because Trump hasn't talked about it much, about going back onto the gold standard this go around, but it's got to be in the back of his mind because he talked about it in 2016. And why would you go audit? Because it's been working, right? Yeah. It's been working. So why would you go audit and potentially cause mass loss of confidence in the US dollar if there is no gold sitting in that vault? So if there's no gold in there, you're going to see runaway prices, 5,000, 6,000, 10,000. I have no idea, but I promise you, it's price elasticity and supply and demand. It's basic economics. If the United States has to go purchase all of that gold to go in there that's supposed to be in there, you're talking a bunch of supply. So that's going to be a big factor. And then the next big factor is, well, let me ask you this. How much gold are you buying right now?
Oh, Zach, I've been buying like crazy. We've been buying like crazy institutionally for our companies and us as individuals because
that will be the public sentiment.
Yeah,
right. That will be the public sentiment. If there's not enough gold sitting in Fort Knox, then I believe the public is going to go rabid over saying, now there's challenges because not everybody can afford 3,000, 4,000, 5,000, wherever it goes, an ounce, right? And it's hard to buy it in smaller denominations, except for certain places. But it's going to be wild.
So I look at that and go, what can alleviate that, right? We're going to see. And by the way, this isn't for me, this isn't speculation. I know there's not the gold there, right? The gold wasn't there in 1971. So it didn't magically appear between now and then. And the waste and fraud and abuse we're seeing right now coming out of the last administration is so gross in magnitude that there is no way we have every ounce of gold there that we're supposed to. Okay. So that's going to erode consumer confidence. It's going to erode confidence in the US dollar. It's going to weaken. Prices are going to continue to move, right? So that being said, there's one caveat that can offset it, and it's happening every day. I got this text from another business friend that's moving and shaking in the world, just flat killing it, and he happens to be working on some pretty big projects for the government, for the Trump administration. I gotta find this group text, but it was so awesome because the way this gets offset is actually by capital investment into the United States, right? And we're seeing this right now. We're seeing some crazy. Here we go. We're seeing some crazy influx of capital back into the U.S. economy for manufacturing. This is what offsets price, right? Gold continues to rise. Yeah, because a strengthening dollar. The way a dollar strengthens is when if interest rates meet at a level playing field like they are now or lower, that strengthens your purchasing power, okay, in the dollar. But if industry comes back home, it will bring the price of gold back down. So some offsetting things, even if they open the doors and there's no gold, some offsetting things. $14.1 billion from Nippon Steel has been committed this week to come back for manufacturing. $20 billion from Husan Steel. $500 billion from Apple to come build manufacturing facilities inside the United States. $500 billion from Stargate, Elon's company. $600 billion from Saudi Arabia and the Saudi Arabia Independent Wealth Fund. That is $1.5 trillion that's been committed this week to come back into the U.S. economy for manufacturing. When we have a $6 trillion economy, that's a big deal. So those things strengthen the dollar, right? So even if they open the door, all of this business coming back can offset some of it. But what it won't do is ever be able to restore the confidence in the dollar. And so because of that, you're going to see some interesting things. Now, Zach, on that, right? This is what's interesting to me. Typically, like a lot of our listeners like cryptocurrency, right? You and I have spoke about it before. We love stable coins. We do a lot of business in stable coin, but we don't. I'm not a Bitcoin guy, right? Like this isn't, we've talked about this before, right? But Bitcoin has been a store of value the last really 7 years heavy for individuals to same offset this lack of consumer confidence in the US dollar. But what we're seeing there is something really unique. If Bitcoin moves, it typically pulls with it other more stable coins like Ethereum or Ripple or you name it, right? Litecoin. It doesn't pull the minor coins with it as big, but it pulls the secondaries. In this latest jump of gold prices, we didn't see anywhere close to the pull, what we call the pull of precious metals. And I'm talking namely copper, palladium, and silver. We didn't see a big pull with it. Let's talk about that for a few minutes, right? What's that kind of look like, and why does it normally pull silver with it?
Yeah, I mean, it's the stored value, right? People want to store their value someplace, and it's because they don't have confidence in the U.S. dollar. So when your prices go up in Bitcoin and these other coins, it's because there is a lack of consumer confidence in the dollar, which is exactly why prices of silver goes up, right? It's like it all comes down to consumer confidence. They don't believe it.
So we're seeing right now Silver Eagles at like $41, which is like massive compared to where it was 2 years ago. I mean, it's a doubling, it's 100% increase.
Well, and 8 years ago, we're like $15-16.
Yeah,
right?
8 years ago, we bought Silver Eagles at $16. We had spot price of $13. And so in 8 years, right, we've seen this massive pull with silver. But here's what's really, really unique to me. And by the way, if you listen to our podcast, we love technology, right? That's where we like to innovate, it's where we like to go. So I thought it was a useful thing. I went to 2 different AI models and asked specific questions and prompts around silver to gold ratios historically throughout all time, right? So if you want to go play with this, right? I played with this inside of ChatGDP, and I played with it inside of Gronk 3. And I asked specific questions about taking a look at all historical data going back 5,000 years, and then I shortened it to 500 years. What has been in the last 500 years the direct correlation and ratio between gold and silver price? Okay. And then through that, gave additional prompts around, because of that, what do you see as the opportunities within each metal? Pretty amazing to see what AI generates for these answers. So here's the answer from ChatGDP. It says gold to silver ratios measure how many ounces of gold to silver, how many ounces of silver are equivalent to the value of 1 ounce of gold. Historically, this ratio over the last 500 years has varied, but going back in ancient times, like civilizations like Rome, set the ratio. This is interesting. So if you know much about the Roman Republic, it was a republic led by the people, but the senators, much like ours, got involved and they started to peg things. So the first civilization that ever pegged silver to gold was the Roman Empire. Okay. And they pegged it at 8-1. And then a few years later, as gold continued to rise in value for them, they had to readjust it and peg it 12-1 because in order to get their conversion. So going back to ancient times, Rome was 8-1, 8 ounces of silver equaled 1 ounce of gold. Then later, almost 200 years later in their civilization, they moved it 12-1. The U.S. government, when we got ourselves in a little trouble in 1792, if you know much about 1792, we had a depression in 1792 caused around banking failures in our country. The U.S. government at that time had fixed the gold 15-1. Okay, so 15-1, 15 ounces of gold, 1 ounce of silver in 1792. Later, over the next century, it naturally just rose and spread to 40-1. Took 40 ounces of silver to equal an ounce of gold. Do you know, Zach, that I did this search a few weeks ago, and so it's higher than this now by a little bit. In early February, the ratio was 89-1. 89 ounces of silver to 1 ounce of gold. That is what ChatGDP calls a gross imbalance in undervalue of silver to gold ratio going back to now 1,500 years of historical data. It calls that a gross imbalance, according to ChatGDP. Interesting that it would look at it. Any thoughts on that, Zach?
Yeah, I mean, it seems awful weird to me
Yeah.
that ratio can get that out of whack, right? And the exact reason, I mean, who really knows? But it is significantly different. Does that mean that gold is overpriced? Or does that mean that silver undervalued?
Yeah.
I don't really know. But based on what we're seeing today,
I would say that it's probably not that gold is overpriced today, given all the pressures.
No, and I think it's market speculation. I think there's a lot of suppression going on with silver personally. I mean, you look back several years ago, JP Morgan got nailed like $40 billion in fines because they were shorting the price of silver on one side, buying the physical on the other for cheaper, waiting, and then taking the pressure off and cashing out for big wins, right? So silver's been played with a little bit. Silver's more in your solar. It's more in your phones and medical equipment. And so, there's probably some market suppression by maybe the government or somewhere pushing these down so things are more affordable. But it shouldn't be as out of whack as it is. So I think there's going to be a reckoning one day for silver, and I think it's going to catch up.
I do too. It's been, and by the way, when we say catch up, right? It's pretty amazing that it's went from $13 in 8 years to $41 for an eagle, right? Who wouldn't want that, right? But it's still greatly undervalued. I think it's interesting, right? But I love to play with, for our listeners, if you don't play with AI, right, you're really missing out. If you're not using a service like ChatGPT or Gronk 3 or what's Microsoft's? I don't use theirs because I'm not a Microsoft guy.
Google's Gemini.
Gemini. Me and Bill Gates, we're on TV, so I'm not going to flip the bird, but that's how I feel about him. So I don't use his products. You can go straight to hell. By the way, I can say that because I met the man. I did work for the man. That's how I did a personal work for him. Pass. But you should play with these AI technologies, and you should ask questions, and you should learn how to use it in your life, right? It was kind of a fun thing, Zach. I then prompted, after these ratios, um, in this case, it was Chat GDP. And I prompted it with the question of, given that gold is at a historic all-time high, what is the median income that an average household could spend on gold? It came back with $1,000 a year. Okay. Well, they can't buy it, right? Then I prompted it and asked, search the web, and where in the world could a person actually take $1,000 and put it at their leisure and convenience into gold? Do you know what it came back with, Zach?
Well, I'm hoping it came back with the sponsor of the Sound Money podcast.
Isn't it crazy? It came back. It came back, and here's the exact response. At Sound Money, they make purchasing gold and silver fractionally, so that everyone can play in purchasing gold and silver, which will be a direct impact and help for those who only have $1,000 to buy with confidence and ease. Wow. Like, it's almost like they work for us. That's crazy. But they don't. Like, pretty crazy. But the point is, right, in the world today, you got to use these tools. Like, you got to use these tools. You got to play with them. You got to have them write emails for you. You got to have them dig deep into questions. You got to use them because they are extremely valuable. And, for example, I asked Gronk 3. I asked Gronk 3, the very question I asked you, Zach. I asked it, hey, what happens if Elon Musk shows up at the Fort Knox? What happens if he shows up there and there's no gold? Here's its conclusion. By the way, it gave me a dialogue here that was like, I don't know, 5 pages long of how the consumer would lose faith in the dollar. There'd be a rush to gold as a safe haven. There'd be a precipitous amount of gold scrutiny to make sure gold was real in the world, because there is an immense amount of fake gold.
A lot of fake gold.
It talked about the global reactions and how other nations would be buying it up like crazy. And then this was interesting, right? It said historically, and it gave some historical data, right? That before that it rose during the 2008 crisis, it rose $700 an ounce, almost 100% increase. During the 2011 crisis, it actually went up 150%. During COVID, it went to $2,000, and since then to $3,000. And then it said, assuming gold is currently priced at $3,000 an ounce, we should anticipate, if there's no gold, 100% increase to $4,000 an ounce.
Well, I was close.
I mean, crazy. And then it said, in conclusion, and this is, if you use Gronk's feature, Zach, this is kind of fun. They have a feature that you can click thinking, like to their think or their deep seek.
Deep seek, yeah.
Thinking is really fun because it continues to analyze. You're done asking questions, and it continues to analyze its own data and say, but what if this happened? And what if that happened? And what if this happened? And it continues to ask itself questions. It's a little freaky, right? It's a little freaky. This went on my phone for another 15 minutes. It continued to ask itself questions. And at the end of asking itself all the questions, then it gave me a new conclusion. If Fort Knox were found to have no gold, I believe gold prices would likely rise 100% or more in the short term to up to $4,000 to between $4,000 and $5,000. Wow. With this possibility, now is the greatest time possibly in the history of man to acquire gold. This is Gronk's thinking algorithm. Thinking, right? Because it gets to know me, right? It also knows that I'm an entrepreneur, and it knows that I ask it questions every day, entrepreneurial questions. It knows that I ask it investment questions and trading questions. So it customized for me. It assumed that I was asking this question with the sole purpose of, should I buy now? Even though I didn't ask it that, right? But it knows me, which is kind of creepy. Like it's like a side girlfriend. I don't know. It's kind of weird, right?
That is creepy when you say it that way.
I know. It really is kind of weird, right? It rationalizes with me and then knows me. So, but if you're not playing with that, that's a pretty fun feature. Zach, I see you're thinking about something there.
Well, I'm just curious. I want to see what. So like, this is like investment advice, right? But I'm just curious what.
Oh, you're playing with one of the AI models right now on the pod. So while you're doing that, I just think that we live in a really cool time that we have ultimate transparency is coming to bear, right, on the market. And whenever there's transparency in the market, it's going to shine its light on areas that there are abuses and lies that will come forward that then point us in the direction of real truth. And one of the cool things, whether there's gold in Fort Knox or not in Fort Knox, doesn't matter. It points us to the truth that gold is a safe haven. It is a safe haven asset. And that's one of the coolest parts about living in today's world is we are going to become a pure, transparent marketplace. It's just the world we live in. And I think you found what you're looking for.
Well, I was just curious, okay, because one of my friends called me the other day. He's like, "Hey, do you have chickens?" I'm like, "Yeah, my wife's got chickens." So his wife wants to buy chickens because the price of eggs is like crazy, astronomical, right? So I just went.
Now's not the time to buy chickens, for crying out loud. Chickens are worth more than they like. The time to buy chickens was like 2 years ago.
No, gosh, it's all about investment and output, right? Because even though chickens are expensive, the output, you can like $12 an egg. Them babies just keep laying, right? Don't eat the chickens, just sell the eggs. But so I was curious, because the egg prices have gone crazy, right? And so you can look, and over the last 20 years, like, again, this is not investment advice, but you can go look at it yourself. We oftentimes talk about whether you store money in fiat currency or whether you store it in some other asset class like a Bitcoin or gold or land or whatever, right? It's all just a store of value in all these other things. You're shifting the value of your dollar to some other value, right? And then can go back to the dollar when you sell it. But so I was asking, so I was curious. So yes, gold over the last 20 years did beat the S&P 500. So if you'd put money over at gold, right? But the question that I wanted to find out was the percentage of inflation on eggs is like through the roof. So what I wanted to find out is if you would have bought eggs 5 years ago, or you would have bought gold 5 years ago, which one would be more valuable today? It is gold.
Yes,
even though eggs have gone through the roof, if you'd have bought gold instead of buying eggs, your money would be worth more today. Same with almost anything, by the way. Like it's fun to play with, but that is the principle is there, right? If you store your wealth in cash, in green dollars, of the fiat currency, which again, defining fiat, a lot of people always say fake. That's not what fiat means. It's force, right? That's a currency that the government is forcing you to use. That's what fiat means. So if you stored it in fiat currency, you lost over the years, because when you take in the account, even, by the way, go do the math. Like, all of you have a 401k, all of you who have IRAs, all of you invest in the stock market, all of you who are doing that, go take your gains over the last 20, 30 years, and then I want you to adjust the dollar for inflation. Because you look at it and you go, I put $1 in, now I have $100,000. Okay, go take inflation off of that 100,000. Guess what? You lost money over the 20 years of putting your cash in one of those financial instruments, because inflation did not even keep up with your gains in the marketplace. Inflation eroded away the value of your dollar. It didn't do that in precious metals.
No, it didn't do it. And it's interesting to me that I'm typing in that very thing into Chat GDP right now. It's interesting, right? Its conclusions, right? That over the last 30 years, gold would have been a much better hedge against inflation, would have been a much better safe haven for your money. And what's interesting, it originally thinks that the S&P 500 would have won until you ask it to take into account inflation.
Yeah, I mean, in the last 20 years, gold is up like 552%, and the S&P 500 is like 441%. Yeah, now, if you throw inflation in there, like the S&P is now down to like 200% increase. Like it's crazy.
It becomes crazy when you take inflation into account, right?
And inflation is real. Like, people use the word inflation not thinking that, okay, my bread costs more. No, inflation is a tax. Like it's like effectively going into your bank account and taking money out, because it's not about how much money you have. It's about what can you purchase with your money, right? So if you can't purchase as many items with your money today as you could 20 years ago, that means you have less money. It's purchasing power is what's relevant in this conversation, right? And precious metals maintain their purchasing power.
Yep. Well, that's what matters the most in the world. So, Zach, it's going to be fun over the next few weeks to see what happens when they go to Fort Knox. You're going to see a lot about it in the news every day. Well, not in the news.
Yeah, and it'll be buried a little.
MSNBC and CNN, those like corrupt places, they're not going to be showing it, right? They're not going to be showing it. But if you're on X, if you're out there watching government, officials today, you're going to see it. You're going to hear about it, and it's going to be fun to see what happens when they go there. But more importantly, as business owners and as aspiring entrepreneurs that are listening, know that we're starting to see the effects of money coming back home to roost in America. And
it's a good thing.
It's a really good thing. It's really going to go up. It's going to add value to our country, to our GDP, and we're going to continue to see wins there. And so along the way, there might be some short bumps of trouble as they go do some of these investigations and they look into things. But fun topic today, Zach. It's been fun to be with you. It's been fun to look at what's going on with the threat of going and auditing for the first time in a long time.
I just hope they take cameras. I want to see what this looks like. Here's what's crazy. Like, people will be thinking, oh yeah, I want to see inside this vault. There's got to be just a massive amount of gold. I can't remember the exact amount, but it's not very many Olympic swimming pools can hold the entire minted amount of gold that's ever been taken out of the earth. Gold does not take up much space. It would be easy to hide that and fake it. It's crazy.
Yeah, it's funny, Zach. I just asked ChatGPT. We'll close with this, kind of interesting, right? I first asked, what performed better in the last 30 years? And I gave 30 years because the stock market actually had major wins in that time. If the time frame was shorter, S&P 500 gets crushed because of 2008. But I don't want people to think that I'm cheating the statistics, right? By going at a time frame that's after 2008. So going back for 30 years, it thinks originally the S&P 500 would outperform gold at face value. But then when you add inflation, it starts to get the number really close. It's like, oh, gold probably is. But then they asked the question, given all that data, what would have maintained my purchasing power for the last 30 years? And it is amazing what it comes back with. It thinks that gold's number one, real estate's number two, stocks would be number three, treasuries would be number four, commodities, which agricultural commodities is how it lists it, would be number five as a store of value, and art and rare art and rare wine would be rounded at number six. But it says this. Yeah, get your wine. But this is what's interesting. It says, what does that mean for purchasing power? Cash, holding large amounts of cash or savings in a non-interest bearing account or a bond tends to lose the most purchasing power over time due to inflation. By the way, where do most retirees put their money?
Oh, yeah, bonds. We want safe investments.
With inflation rates generally outpacing interest rates over the last 30 years, savings accounts and bonds would be the worst vehicle to store for a store of value. Traditionally, bonds traditionally bonds that do not adjust for inflation, such as corporate treasury bonds, may not maintain their purchasing power and will be a negative holding for yield. Ouch. This is ChatGPT, right? Like, and in this, right, conclusion, gold has served as a store of value for all periods of time, specifically in times of economic crisis, which I think we're kind of there. And it has kept up with inflation. That's pretty impressive. And so I love to reason with these AI models and continue to dig deep. So,
well, and with that, real quick, Josh, I think this is really important for people to understand, because you mentioned it, that all of these big institutional banks are buying up gold and silver, right? All of your central banks.
Yes.
Question is why?
Ah.
So most people are like, well, they're buying it because they think it's a great investment. They're buying it because, why are they buying it? So in the marketplace, this is just basic market fundamentals. When there is higher risk in the market for institutional investors, where does their money go? They seek safe harbor. So money will flee the market in inflationary periods and high risk periods, and it will go to safe havens like real estate and gold. So why are the banks then buying up so much gold? I don't think it's not only because they don't think it's in Fort Knox. They've been doing it for the last 10 years. It's because they know that the dollar is not a sound instrument, and they are backing all of their businesses with gold. So all of the debt that they've loaned out and all of that, if the market crashes, we have a 2008 again, they do not want all of their cash exposed, right? They do not want all of their investments exposed to the fiat currency and all the things that they're invested in. So what they do is they liquidate a lot of those debts and assets, and they go buy gold to back all of those. So they have the physical gold in case something happens, it can keep the bank solvent. So it's like, if it's good enough for the institutional banks who are putting you in debt, it's probably good enough for us to do the same thing, right? To have some backing ourselves, because they know when bad times come, they don't want their money exposed in the market. And so it seeks a safe haven, right? It flees the market and goes to safe instruments.
Well, let's hope, Zach, that there's some in Fort Knox. Let's just hope that when they show up, that they got some there, and we haven't been bamboozled for, like, I don't know, the 100th time in the last month about where our money is. And so for all our listeners, we appreciate you. We really appreciate the opportunity to be with you today here at the Sound Money Podcast. And we can't wait to see you next week. Sound Money, Sound Principles. Till next time. Thanks, Zach.
You guys are awesome. Appreciate you. If you don't have gold or you can't buy a full ounce, go check out sound.money.
Awesome. You guys have a great day. Adios.
See you guys.